This is the Times Television Network, and you're watching ET Now.
So joining us is Vandana Hari. She's Asia Editorial Director at Platts, and we will now discuss about the crude oil prices. What's your outlook for the crude, both Brent and NYMEX for 2014 now?
Brent crude as the global benchmark of crude now is expected to be pretty much range bound through 2014. I would say in the vicinity of $100 to $110 a barrel. NYMEX or the U.S. light sweet crude benchmark would probably be a little more volatile because there's a lot of additional pipeline capacity that's coming, has come on stream this year, and some more expected next year to take oil out of the storage hub of Cushing to the refiners in the Gulf Coast. So what we could see next year is a further crunching or the spread between Brent and WTI coming in from about $12 a barrel now and could as much as half to average over 2014. Now what we've seen this year is that more fundamentals actually influencing oil prices rather than geopolitical factors. There are geopolitical factors, of course, but to a large extent it seems for now that they have played themselves out. There's about an estimated 1 million barrels per day of oil that could have flowed into the market but is not flowing because of problems in places like Nigeria, Libya, South Sudan and so on, which is expected to continue.
Vandana, the big theme that everybody seems to be talking about really is the shale gas output, which is expected to go higher now in 2014. What supply-demand numbers are you working with?
So what we have seen in the U.S. is actually drilling concentrating more on the oil-rich plays, so areas from where you can get NGLs, basically liquids or light sweet crude. Nonetheless, there continues to be a steady growth in gas supply. Definitely it happened in 2013 and expected to happen in 2014 as well. I have some numbers here with me which are estimates by Bentech, a company of Platts, which has projected that the U.S. gas supply, now it's difficult to break out shale, but U.S. gas supply, natural gas supply, is expected to be up about 2.3 BCF, billion cubic feet per day, or roughly a 3% rise in 2014 to about 72.2 BCF per day. And going forward until 2018, the U.S. gas supply is expected to continue rising by about 2.5 BCF per day, according to Bentech estimates, until it reaches about 80 BCF per day in 2018.
Vandana, also could you please categorize under bullish, bearish or neutral for the energy sector going into 2014 quarter-wise, if you may?
Yeah, the overarching theme, as I mentioned before, appears to be a reconnecting with the fundamentals of oil prices. The other major factors or trends that are worth keeping in mind is increase in U.S. tight oil production. So the U.S. is expected to add nearly 1 million barrels per day of production from its shale plays in 2014. There's also growth expected from countries like Iran and Iraq. Now, OPEC at its meeting earlier in December pledged to keep its output, combined output at 30 million barrels per day. But interestingly, Iran and Iraq both vowed to boost their output. Now there's factors that might hold both the countries back. We have seen in recent weeks a lot of violence in the southern part of Iraq, which is an oil producing region. Iran remains under international sanctions. Now that might get lifted if there's a comprehensive agreement that does get forged towards the middle of next year. So overall we see there's ample supply. Demand is expected to go up as well, but largely a balanced picture. I think there are a few unknowns and that could surprise the markets, if especially if the production that has been curtailed in places like Nigeria, Sudan and Libya does come back to the market. I feel it will be quite challenging for OPEC to try and rein in production. But at any rate, I think the cartel will move to do something if to try and support prices at $100 a barrel. It wouldn't want the prices to slip below that for any sustained period of time.
Well, thank you, Vandana. That's about the crude oil prices, but also to natural gas, where the prices have seen very strong gains, more than 40% up in Indian markets itself. What's your view on the demand-supply scenario going forward?
Natural gas has been a very interesting area of the energy scene to watch, especially because of the boom in production in the U.S. In the U.S. itself, we have seen natural gas prices depressed quite a bit as a result of the increasing production. But interestingly, at the same time, we've also seen natural gas displace a lot of oil consumption in the U.S. and quite prominently in the power generation sector, for instance. As a result, some of the trends that have been with us in 2013 and likely to continue in 2014 is as more coal gets freed up in the U.S. because it's being displaced by gas, a lot of this coal coming out into being exported into Europe as well as in Asia. Nonetheless, Asia's reliance on gas imports remains pretty high as well. And we've seen, for instance, in recent days, the average for spot LNG prices, the Japan-Korea marker of Platts averaged $19 per MMBTU, pretty high prices, which were basically because the Chinese came into the market pretty aggressively to buy. Now, this is for North Asia, this is a high demand season for gas. Winter heating demand kicks in, and the Chinese, because of drop in domestic gas production, had to resort to more LNG imports. Nonetheless, we saw $19 a barrel kind of being a resistance level, so prices have come back a little bit since then.
All right, so that's the view really coming in for the energy sector. Thank you so much, Vandana, for joining us and giving us your sense. So another year that could see some more steady gains coming in for that.
This is the Times Television Network, and you're watching ET Now.